Right, gentlemen, with your eyes on the box, 420 points up on the Sensex. I guess that should certainly give us what the market feels about this budget. We've also got Raamdeo joining us at this stage from Motilal Oswal. Thanks for joining in. Our panel is a power-packed one at this stage. Raamdeo, first take on the market reaction. 420 points up, and it's been just in the last 10 minutes that we've seen a 200-point jump.
Hello. Yeah, I think market was clearly fearful about excise increase in certain particular automotive segments and all, and that having not come through, I think that's a big booster to entire corporate segment. So clearly that was one negative which was built into the that expectation. So I think that positive has taken it off.
Right. Raamdeo, in a sense, do you believe this budget provides medium-term direction for the market, something that the market really was expecting out of the budget? Do you think this provides medium-term direction?
My sense is that market was clearly fearful about this duty rates rises, and whether in this current inflationary environment will the consumers be impacted by this higher prices, and hence demand could slow down, and hence the earnings could also get impacted. But since that has not come through, and hopefully on a moderating inflation and moderate borrowing plans of government, can we see kind of a picking out of interest rates also. So next year could be, by this time things would be somewhat easier on the corporate earning side, and the interest rate scenario should also be somewhat softer. That's the kind of, this combination has kind of given some kind of lift to the market.
And I just want to refer to the market breadth also, and the market breadth is looking exceptionally strong, which means that the broader market today is participating. And watch out for some of the infra stocks, large cap, mid cap and medium cap. All the infra stocks, especially construction companies, are really making a roaring comeback. Akash, this one is coming your way. To your mind, Akash, what are the chances that tomorrow morning when we get up, it's going to be back to basics? Indian markets will track crude, inflation and then liquidity, and budget only has a shelf life of 24 hours.
Yeah, I think that's likely, in the sense that I don't think this budget, in my opinion, has done enough to break us out of the short-term macro challenges which we have, which is, as you talked about, crude, interest rates, inflation. Obviously the budget has got some positive effects. We talked about cash-based transfers, we talked about GST, we talked about some of the things on the infrastructure side. But I think there are a lot of issues still left unresolved. They've ducked the issue on FDI, they've ducked the issue on nutrient-based subsidy for urea, they've ducked the issue on on agricultural reform, the supply chain. They've ducked issue on some of the other issues in terms of corruption and fundamental changes there. So I don't think, in my opinion, I think it's a positive budget in the sense it's positive. It's a positive surprise compared to extremely low expectations. But I don't think personally the budget has done enough to break us out of the short-term challenges that we have, which are macro-driven and which are driven by oil and inflation and interest rates.
Kota, could you agree with that? Could this be a one-day wonder in terms of a market reaction to the budget, as opposed to some ground realities or global realities we live in when it comes to the Lal Street?
I think we are facing challenges which are both external and internal, and those challenges continue beyond the budget. Having said that, the finance minister has made it a point to talk about corruption and has talked about the committee and has acknowledged the fact that governance needs to be significantly tightened and tuned up. But some of these are not really issues which the finance minister can address in the finance bill. Therefore, recognition of these issues by the government itself is a positive step, though a lot needs to be done on governance. On inflation and oil, again, factors external to the budget making process, and therefore the markets will factor them in on actual realities. But I do believe that we have actually got a budget better than expected, and I do believe that expectations were more at a normal level, and therefore the budget has done better than normal expectations.
Raamdeo, post-budget, which to your mind are clear set of losers and gainers?
Clearly the automotive segment, which was being hammered because SANVAT increase was to come, that looks to be, and there also the interest rate sensitive. So I think in combination automotive and banking both seem to be the winners at this juncture.
Right. Swami, come in on the point that Uday made, really nothing concrete on oil. Are you disappointed that nothing really concrete came out from the finance minister on diesel deregulation? Anything really on that front? Because clearly one would have expected some talk on that front. I know crude is at $100, but still he could have done something on that front.
You know, sometimes saying nothing can be very significant. Most people thought that he's going to cut duties, and most people thought that, you know, some additional support for the oil industry to prevent a price rise. He was silent on both those. It almost suggests as though he is determined that fiscal consolidation is more important than constantly trying to provide sops to the consumer. At the end of it all, I'm not sure how it's going to go out. It is possible that a hit will be taken by the oil marketing companies rather than by the consumer. And yet, this is something that the cabinet will have to decide, and the petroleum minister will have to play a role in this. Clearly, I think Mr. Pranab Mukherjee would be happy to say, look, let's face it, energy is scarce, energy is expensive, let us not pretend we can keep subsidizing it forever. Whether the cabinet and Jayapal Reddy will go along with that, I'm not sure yet, but that in some sense is not really Pranab Mukherjee's job.